Can you hear me, Jesus, Michael? Can you hear me?
Yeah, good evening.
Maybe waiting for others. Sorry, give me a moment.
All right.
Hello?
Yeah, I can hear you.
Sorry, I just go home not too long.
All right, brother.
Yeah, now.
All right, so good evening. I don't know, can you guys hear me well? Sorry, I got the call.
Yeah.
Right, so,
Michael,
Yo, brother.
you are the real MVP here. If I enter this meeting and I don't see you, I'm going back.
What can I do now? You need to learn.
okay, so our last session, due to, I don't really know what Telegram did to us, we were able to get a recorded copy, a recorded version of it. Can you guys hear me?
Yeah.
All right, I would kindly ask you guys to mute your mic. This trade, I took this trade today, but slippage stopped me out during this event. And I was really pissed. You see how we just ran well. I got stopped out due to slippage. That's why sometimes I really do like setting SLs. We just be active and watching the position. But then be that as it may. Can you guys hear me? Can you guys hear me? Anybody? Alright, that's good. So today we're going to do a quick recap on what we've done so far, I guess. Because the last class we treated premium and discount pricing, right? Last class we treated premium and discount pricing. And I think I went in depth on it. And the sad part is we couldn't get the recorded copy because a lot of things were said in that session. A lot of things I don't think I'll even remember to state today. So, by the grace of God, I'm going to try to revisit almost everything I did in the last session just for the sake of those who missed out. Is that okay? So, let's see. So the idea behind premium and discount pricing is, okay, the basic idea here is as a trader, you are trying to buy low and sell high. You are trying to sell high and buy low. That is a rough idea. So which means you are looking to, sorry, this is not where my whole chart thing is. Yes, my chart stuff is on GBP. Good. So which means you are looking to, what's the word? You're looking to start buying at a discount and to start selling at a premium. Right? Can you guys give me a minute, please? Just a brief moment. Right? Give me a minute. I want to get something.
Emmanuel, what's up?
Those watching this recorded session will hate us for talking.
All right.
You guys should hate us for talking during the pause session.
Yeah.
Michael here is the MVP, so he can talk.
I'm wondering why the other students are not active in class.
Well, honestly, if you know what a lot of people, you understand. The last class, the reason why I missed it, even though I came late, was because I just came back. So, in fact, I was rushing, I was driving and I was rushing to come home so I can keep up with the last class. But still, when I came, in fact, my brain was scattered. Unfortunately, the class did not record. So, I'm happy that he's talking about revisiting them today.
Oh, okay.
Yeah, so people have stuff that are going on that makes them miss stuff like this.
Okay, I'm back. Good evening. So, like I was
Good
saying,
evening, sir.
the basic idea, good evening, sir. So, the basic idea here is you're buying at a premium, so you're selling at a premium level, you're buying at a discounted level. Now, on your chart, right, in a valid market structure, the anything below the 0.5 level, anything below the 0.5 level is a discounted level, and anything above the 0.5 level is a premium zone. Now, in the basic rule here, I told you guys, after every break of structure, price is expected to revisit at least 50% of the market structure. When we're talking about market structure, we're talking about liquidity sweep, a high, a low, and a break. Are we together? Are we together? Now, I think I spoke about efficient and inefficient price action in the last session too. Or have I spoken about that before? People, please answer me. I need answers. Or
Okay,
was that in the
you
last class?
explained it.
That was in the last class too, right?
Yes, yes.
Very good, beautiful. So I
If
finished
I
the one
remember,
with
you said EPA and IPA, right?
yeah.
Yes, you spoke about it.
Very good. So we're just going to revisit it again briefly in this class, just for the sake of it, right? So today we'll not be able to treat AMD. We're just going to run a revision on what we did in that last class. I'm doing this because of those that missed out, and so they can watch the recorded session later. So AMD is going to be in our next session, which is most likely going to be tomorrow evening, right? So this what I'm highlighting right now is supposed to be entry models, and I'm going to treat that after we are done with pattern recognition. So I just wrote it on the screen as well. I don't forget because this is where I'm using as a whiteboard. So premium and discount pricing. Okay. OTE, there's something we call the OTE, that is the optimal trade entry. The optimal trade entry, which I give you guys, are between 0.61 to 0.71 level. 0.79 is an invalidation level for a healthy price action. Normally, it's an evaluation level. But sometimes you might see sweeps and other things. So basically, the idea is you want to start seeing a rejection between 0.61 and 0.71 level for it to take a trade off an OTE. Does that make sense? So I think I gave you guys a couple of examples. And look at this, for example. So let's go to our 1 hour. Let's go to Euro USD, our 1 hour time frame. So you can see my chart well. This was what played out today in the market. So what played out today in the market, right? So I'm using live charts to teach you guys now. This was what played out in the market. So 1 hour time frame. Remember what I told you guys? When you see, let's just clear this. Let's clear this whole thing. Just clear this whole thing. Get rid of everything here. No, no. I don't want to get rid of that levels of maxing. Let's just get rid of this whole thing here. Perfect. So now look at what played out in the market today. That is that trade just saw. So this is what played out today. Okay, so this is on the 1 hour time frame. Let's start from here. Let's take this out. So the first thing we can see over here is the liquidity sweep, right? Right, please you guys can unmute your mic. Let's have an interactive session here. Right, so this is a liquidity sweep, right?
Yes.
All rules have been met. First candle closed where it wanted to close. Second candle rallied above. Third candle closed below this, right? I'm right here. So this is a valid liquidity situation. You can test it like that. So we get our break of structure. And price comes to reject from the point. Right? Price comes to reject from the point where the market changed its delivery, right? Where there's a change in delivery, and that is over here. That's where we're seeing a rejection. Am I right? All right. So the
Yes.
next thing we're going to be looking out for is we're going to be drawing out our Fibonacci to check is it at a discount or is it at a premium level. So our Fibonacci tool is drawn out. And what level do you see price rejecting from? What level is this?
The 0.5 level.
Perfect. We see price rejecting from the 0.5 level. And remember the basic rule is after every break of structure, price is expected to return into 0.5 level. That is 50% of any market structure before confidence in that given trend. So this happened. Now, after this happened, this has been recognized officially as a brand new liquidity sweep right here. This we're going to go down to the 5 minutes time frame, but I'm just marking this out, right? So let's go down to the 5 minutes time frame. So from the 1 hour time frame, remember it's always 5 minutes as next. So that's where you get your entries. So now we're going to take this as a break. Let's clear this thing out. It's too big for its own liking. So we're going to take this out. Now, over here, liquidity at the top of this candle was taken. Right? That's after it rejected it. That's before it tested the 0.5. So liquidity there was taken. Liquidity was taken and the structure was breached. So basically, just say a new low was created. Let's not use the term structure was breached. So we have this imbalance present. This is the inefficiency we're always looking for. The next thing we're going to be checking out is we're going to be looking for a period off OTE level. Look at this. Now as you can see, the price came to reject from 0.71 level neatly for 0.7 level and it sold down, which means if you're active on this, chart around this time, you have been getting your trade, let's just say from above the inefficiency, because ordinarily we are taking trades from 0.61 to 0.7. So let me see here. The stop loss, you can put it here, but most people will rather go here to place safe. And your TP is going to be at the 1 hour low because you came down from the 1 hour. So basically, the market has been selling for a while. You can zoom out your chart at times to just check for the target levels. Right, so look here, this is a very big ass inefficiency. So because of that, we can just take a look. There is multiple group of structures. So we're waiting for a rejection before we expect price change this character. So this level here might be our best bet for our take profit. So that was why this was why I targeted initially. So just targeted. And you see price running into it. Price running into it easy peasy. Are we together?
Yes.
Does this make any sense? Is it straightforward?
How many R is the setup?
5.48. Does this make any sense? Is this straightforward?
Yes. Yes, it does. So I wanted asking something, maybe on the 1 hour time frame.
Okay.
Okay, just zoom out a bit.
Like this?
Then maybe up on the 1 hour, just close it in a bit. I'm trying to, the previous break of structure, that's what I want to point out.
This one?
No, the one before the high was created, you picked out the liquidity, the previous one.
This is where I picked out the liquidity sweep. So we're here or here?
No, this is to the right. To the right, that's left.
Where?
Okay, Now this previous one here now, where it seems like there's a little bit of yes. Can this be considered a sweep?
Right. Remember, I know it can't because it hadn't gotten back to 0.5 level of this market. It hadn't gotten back to 0.5 level of the.
No, I mean the structure after it. It did sweep that. Yes. The one
you're talking about here, right?
I think it was
any trade you're thinking of this point must be a scalp. Something that
okay.
will last just
Now,
5-10 minutes at most. You don't take
okay, now this point, where the one in the middle, this point,
this one,
the structure after it, no, the one to the after it.
This one.
Does the one that comes and sweeps it now, does it count as a liquidity sweep?
This one that broke above it.
The next one, yes. Does it count as a sweep?
Of course, it's a sweep. You can count it as a sweep,
Okay.
yeah. That's why,
So can
no,
we
I didn't
use?
count it. Relax, I didn't count it as a sweep from over here. I counted it as a sweep from the lower time frame. Alright? I just waited to see a rejection from here. That is all I wanted. All you want
Okay.
from this time frame is a rejection. Like I
Okay.
said,
So
I told you guys when I was teaching liquidity, right? Your sweeps should be gotten
yes.
only on the time frame where you're looking for your entry. So if your entry take entries of the
Okay.
5 minutes time frame on the 1 hour time frame, all you have your only business is to check for trend. What does price want to do from here? That is all you need to know. What you don't really need to
Okay.
check for all those sweeps and whatnot on the 1 hour time frame. You just need to know what price is doing at that from that level. You understand? So me pointing out sweep here is because I was trying to
Yes.
understand
Yes.
what
Yes.
price was doing
So
with this yeah, and it's going to compensate. I don't know if that makes sense. So waited, so rejection.
yes, I understand.
After getting that rejection,
Okay. So
right, ask a question.
okay. Is it possible maybe I share my screen a bit so that maybe I could actually just for a minute explain exactly what I mean?
Sure, cool. Share your screen. Let me stop sharing. I'm coming. Share your screen.
All right. Okay. I'm trying to. Okay. So video. Okay. Can you share your screen D so that it will just show? Now let me share my screen now. Okay.
You-
I think this should do. Okay. Okay. I've shared the screen. Can you see it?
No, I can't. Okay,
Hello,
come on,
sir.
it's loading. Give it a second. Give it a second, it's loading. Nothing is showing here yet.
Sorry.
Okay, I think I can see your screen. Turn off your camera.
Can
Turn
you
off
see
your
my
camera.
screen?
Yes, turn off. Yeah, just turn off your camera and your screen. Yeah, you can see your
Yes,
screen.
I've done that. Yes. Okay, yeah, I've done that. All right. So look at what I'm talking about now. Let me get this off. I was previously checking stuff. All right. Okay. Aha. This here, this right here, can it be considered a sweep? This one
Yeah.
right here.
What I'm saying is, are you picking your entry
This
from the
one.
1 hour time? You've not answered my question. Are you taking your trade from 1 hour time frame?
Okay. From the rules you
No,
gave
no,
us
no,
for
no.
the liquidity sweep
Have you
entry
asked?
method.
No, 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 no. Calm down. I asked the question. Are you taking your trade from the 1 hour time
Okay.
frame? Are you taking your trade from the 1 hour time frame? It's
In
a
this
yes
case,
or no.
I'm using the. Okay. Let's say it's a yes.
You want to take a trade off the 1 hour time frame.
No, I will still drop down to the 5 minutes.
Exactly. You are not taking your trade from the 1 hour time frame. You are dropping down to get your entry on the 5 minutes time frame. So nothing concerns you with any liquidity
Okay.
sweep happening here. You're looking for a liquidity sweep on the 5 minutes time frame where you're taking a trade off.
Okay. Okay.
Exactly. What you need
I
to know
understand.
here, what you just need to know here is where is price rejecting from? Does it look like price is going to continue selling? That's all you have to know.
Let me- Okay. I think I understand it better now.
All right. So can I go on?
Yes. Yes. Yes.
Sure. Excuse me a moment. Okay. So back to what I was saying. I don't know if this is clear now to you people. Michael, is it clear to you?
Yeah.
Right. So basically, Your business on the higher time frame is to know what price is doing. Every other thing concerning your entry, your entry model, is done on the time frame you are going to be looking for that entry. So basically, at this point, if you see you are waiting, you want to look at this as a liquidity sweep, you wouldn't be on this trade. You're going to be waiting for, after this break of structure, you're going to be waiting for price to drive back up. You're going to have to wait for price to, you're going to have to wait for price to drive back up. You're going to have to wait for price to drive back up before you get your entry. Before you get your entry and come back down with it. So I don't know if that makes sense. If you are taking this from the 1 hour item, it means you are not on this trade yet.
Okay, yes, I understand it more clearly now.
So
Okay, yes.
for you to be on the trade, you don't have any business with the liquidity sweep happening on the 1 hour time frame. What you just want to know here is the trend. Does price have a reason to continue going down? Does price have a reason to start going up? These are the things you are looking out for. These are the things you want to know. Right? So I think premium and discount pricing, like I said, anything below the 0.5 level is a discount. Anything above the 0.5 level is a premium level. Your OTE 0.61 to 0.71, and your stop loss return is anything below 0.79. Right? Basically, you look for a low or a high below or above the 0.79 level, as the case might be. Right? Your targets, you always target a targeted liquidity, right? A targeted liquidity. I think a targeted level rather. I think I explained how you identify all those ones. So you always target a targeted level. So then, yeah, I think those are the basic things. What else did I talk about in the last session? I gave you guys a rule. I gave them a rule for liquidity sweep, and I used a 3 candle schematic. Now the 3 candle schematic, remember the rule. First candle closes wherever it wants to close. It was in GBP USD I did that. Let's go back to my drawing board. On GBP USD I did my drawing board. So remember the rules. I gave you guys 3 rules. The first candle can close wherever it wants to close. So here it is. Right, so the first candle can decide to close where it wants to close, it doesn't matter. Second candle has to rally below the point where liquidity is meant to be swept, or the point where liquidity exists. It just rallies. It can decide to close below, not our problem. It can decide to close above, still not our problem. It just has to go below it. That's all we have to know. Or it has to go above it in a scary scenario, as the case might be. Then the third candle must close above this candle, that's the second candle, above or below, as the case might be. So remember, we're using a 3 candle schematic every single time we're looking for liquidity sweep. Are we together? Are we together?
Yeah.
Then lastly, before we call it a day, let's talk about inefficient and efficient transactions. Yeah, that's the IPA and EPA. Now the basic idea, the basic summary, I use this, I remember using this schematic to explain it. You have a market like this, price breaks and comes back to retest this point and it keeps going up. This is an inefficient transaction because there is an inefficiency here. Price didn't return to 0.5 level of this structure, which means when the sell should start, we can target the 0.5 level here. If we're going to be taking any short trade, we target 0.5 level here because it is most likely going to return there, and this is an inefficient transaction. An efficient price action is one whereby after every break of structure, price drives back into the 0.5 level before going up, like what we saw on EURUSD today. That is a very efficient price action. Price came back to 0.5 level, tapped in, and continued going in this direction. Are we together? Are we together?
Yeah.
All right, is there any question? Is there any question?
Okay, so the rule now for the was it for the liquidity sweep? First candle closes anywhere it wants to close. Second candle closes let's say we are looking at an uptrend and it closes below,
No,
then the third candle.
second candle can close anywhere it wants to close also, but it has to rally below or above the liquidity. That is, it must
Okay, it must.
go. If it doesn't, it must go below. It must go above the liquidity lines. Now, it can close. You
Okay,
can decide to
then
close above. You can decide to close below, but let it cross the liquidity level. That is what we want. Then the third candle,
okay, then the,
then the third candle must close above the second candle or below the second candle, as the case might be. That is
all
something like
right.
this. This is an example here. Right?
Okay, right.
Right, is there any other question before we call it a day?
Yeah, I hear you.
Yeah, I can hear you, Michael.
So you said you are a scalper, right?
Yes, I am.
So that's how quickly do you get out of the market when you are
Okay.
scalping?
Alright, what I mean by when I say on the scalper, right, I have a limit to the time I don't hold trades for days in the market. That's the forex market rather. I can hold on crypto for a couple of days. I really don't mind that one, yeah, because I mean the crypto peers has how they are. But if we're in the forex market, I don't hold trades past the close of the market for that day. So I can hold my trade from 10 a.m. to 10 p.m. I did 10 a.m. to 9 something p.m. Or I can hold my trade from early in the morning till evening. But anything past that day, I usually close off. Once the day is closed, I usually close off. Or if I don't close off, I take my past out and I just let the rest to be all together. So yeah. Do you have any other question?
Yeah, one more, just like a bonus actually. Can you
Alright.
check the can you check the Bitcoin price actually?
You want to check Bitcoin price action?
Yeah,
Okay, what's happening on it?
I just check it now. Let's see what's happening.
Give me a moment. Okay, can you see my screen? Can you see the Bitcoin chart? Can you guys hear me?
Yeah, I can see.
Now, if you go to Bitcoin chart, because it's been a bullet, an uptrend for a while now. There's been an uptrend. Let's see. Oh, where's this sweet liquidity? Sweet. Where's this sweet liquidity loss? Okay, so let's look at this level here. Can this count for me? This third candle has to close above the area where the liquidity lies. Oh, okay, yes, that is still valid. So it did. It swept. It broke this structure. Broke the structure over here, right? The structure is broken. But this is quite a healthy price action because there are very little inefficiencies in this market. The price never came back to revisit. We have this level that is lying blank. Right here, that's lying blank. So if we're going to be looking for shorts, this is going to be among our targets, right? So this level is lying blank. This level is lying blank because it hasn't been filled yet. There's an inefficiency there. Price didn't come back to revisit the 0% level, so that is also a gap. They've been buying aggressively, so this, sorry, looking at this. Like I'm trying to figure out what price is going to continue doing. So is most likely going to continue happening. This chat kept going. Let's see the number of inefficiencies in this market. So, here's the third one. Here's the third one. Now, whenever this happens, this became a targeted level. If this is going to hold, then this might become a targeted level. Right? Let's go to 12 minutes or something. Let's use power instead. The first time frame, first candle closed wherever I want, second candle rallied above, third candle, one third candle closing below this level before we can know what we're going to do. Because this is still a bullish trade, this pair is still very bullish, and it's not showing any buy opportunity yet. So want this candle to close below this, right? If it can close below this, then we'll drop down to the 5 minutes time frame to look for a short opportunity. But if it closes above it, we're going to have to wait. Because at this point, I remember telling you guys, you don't buy a trade when it's at a high. And this is trading at a high. This is a previous high. It's trading at the high. So you don't start doing a long position when a trade is at a high, because this is at a premium level already. So you want to wait for it to show signs of retracement, and then you can probably target. Let's go back to that first time frame. You can probably target this low as your first target, this as your second, and this as your third, because those are the areas where inefficiency lies. But then, if I'm going to be entering a short position on BTC, for example, this is what I'm going to be taking as my target. My target is going to be over here. So that's my target 0.5 level here. This is going to be my target. I don't know if that makes sense. So our entire trade of BTC is going to depend solely on how this candle closes. If the candle closes in 24 minutes, if it closes well, we could get a short. Or, since it's going to be a possible retracement, you might see price rally one last time above this high, right, to sweep the liquidity before it starts dumping. Because I mean, one liquidity sweep sometimes isn't enough for price to move down. So you could see it revisit this high one more time and dump into this level. Does that make sense? I'm going to put this on my watch list. So is there another question? Is there another question? Okay, so I think this is what we'll call it a night, right? We'll call it a night here. Good night, and see you guys tomorrow, same time, right?
All right. Yeah, you guys.
Mm.